Here in three, two, one, and here we go. All right, welcome everybody to the Rocketcast. This is our third episode, and today we're bringing on a investor in crypto and an entrepreneur. His name is Scott Nixon, and I think he's going to give a lot of good takeaways for us on how he structures his day, how he's gotten into the crypto space, and more specifically, what his taste or flavor is of crypto investments. So, really excited to have Scott here. Scott, why don't you just start off by telling us a little bit about your background and who you are for the listeners?
Yeah, absolutely. Yeah, it's great to be here with you, Nicholas. So I fundamentally I'm an engineer, software engineer, technologist. I've been an angel investor since about 2015, and been basically investing in crypto since then. I ran a startup for about a decade that was bootstrapped. Um, and love doing that. I love entrepreneurship. I love talking about business. I'm a little burnout on the marketing side of things, but crypto, just love it because everything about it, it's like I can dig into the tech, but I can also get into investing. And I would actually say when in 2015, before 2015, I'd never really considered myself much of an investor. Just index funds and those types of things. And what
Mm-hmm.
happened was when I started paying attention to where I was kind of long term putting my money, I got really more and more interested. So much so that at the beginning of 21, I just kind of got back into DeFi and just got obsessed. I was holding a bunch of angel positions that whole time, but it just kind of, you know, just became an obsession where it was like 20 plus hours every week focused on
So,
crypto.
for our listeners who might not know better, when you say angel positions, what do you mean by that?
Yeah, so that means that I was making investments in early stage companies. Everybody that I did investments with had revenue, but they were maybe looking for like a Series A or like a larger angel round.
Yep.
And I did most of that investing on Angel List. And yeah, it's just early funding allows companies to kind of um, grow, right? And
Yeah,
I'll
give them the
usually
money to
these
pay
startup,
expenses and get salaries for early employees.
yeah. And a lot of times this is like a precursor to them raising larger rounds of capital later on, so they can really scale. So
Okay.
yeah.
Now, typically, would you exit some of these after they got that next investment? Were you just there for the early round, or would you stick around, reinvest, or how does that work?
A combination of both. Angel investing, VC investing is a very illiquid type of investing, and so your expectation on timeline is a 5 to 10 years before you're likely to see any kind of an exit. Um, and I did some follow-on investments, not many. Partly, some of that had to do with the opportunity because they have to make the opportunity available to like previous rounds of investors, and a lot of that just has to do with deal structure and a lot of inside baseball. And I'm not an obsessive. I made 15 investments, so I'm hardly like the world's most diverse angel investor. But yeah.
All right. So when it comes to crypto, like what originally got you into crypto? Like, when did you first see it? What was your first thoughts, and then how to go from there?
Um, you know, Early on, like I, of course, because I'm a technologist, I knew a lot of people talking about Bitcoin, but I never really just got that involved in it. And in 2015, I actually did make some of my angel investments into some crypto companies. And because I, like many people, really like this whole idea of investing in the infrastructure of these new frontiers, right? It's oftentimes people talk about picks and axes, right? Where it's in the California gold rush, it was the people selling picks and axes and everything else that made
Hmm.
all the money, and the gold miners, large variation in results. So
Yep.
um, And while I think it is a interesting way to approach investing, it is still very generic and leaves you really exposed if you don't understand the whole landscape. And I would say that's an appreciation I have today that was lacking probably in 2015. Like you can't blindly invest into any industry just because like there's going to be a lot of stuff that sounds really good and like I would say one of the things that's from the recent market, Peloton, you know, tanked 80+%, right?
Right. Yep.
And everybody's like, how much farther can it go down, right? And it like has still continues to go down, right? It can go all the way to zero, right? And I mean, I even did a full like evaluation. Like I spent the better part of maybe 5 or 8 hours, somewhere in that range, evaluating the company to see if it was a worthwhile investment. And I was like, nope, I'm
Yeah.
not going to take a position. So just because you like a product and it sounds good and it's like the industry leader doesn't mean it's a good investment. So
Yeah, well, there's a lot that factors into it, and I think that's where you kind of sometimes don't have the crossover between your standard investors and stocks and options, and your crypto investors who I think are maybe, especially some of the ones who like they just got into investing because of crypto. They don't understand like doing your due diligence on a company, looking into its financials, its balance sheets, and seeing how much cash is on the books, what underlying assets might they own, what's their expenses, and instead it's just, hey, this coin looks great. They have an awesome logo. I like the white paper. Here's $1,000. Which I think is what we need to get more of in the crypto space. But it's also
yeah,
hard to access that type of financials
yeah,
with a
because
lot
there's
of
no
these.
requirement. Yeah,
Exactly. Unless they're choosing to put those out on their own, there's nowhere for you to go to find that.
yeah. You could like look on chain and see like are they doing what they're saying what they're doing with their token, and then you got to like hunt around for wallet addresses for the project and then look and see what they're doing, right?
You're right.
um,
And
so
there's people who go out there and do those things. And a lot of times that's what exposes a project or makes it a little bit more reliable. But it's hard to consistently do that yourself
yeah,
unless you have a ton of time.
one of the biggest crypto projects out there, Urine Finance, they've got a great dashboard that breaks down where they spend all of their money. But I was looking at it yesterday, and they still don't have their May numbers in there at all. Like there's just like there's like $50,000 of expenses, right? And it's like it's the 6th of June, right? You would think they would be adding things as over the month or whatever, right? But
Right.
yeah, so
So another thing that I thought was interesting was you talked about how you started off doing like security, and you were an engineer. Um, how do you think that has translated towards like giving you an edge as an investor or looking at different projects or anything along those lines?
I mean, I think the edge that it gives me is that once I understand how the smart contracts work and addresses work and multi-sigs work, once you understand some of these basic foundational ways to keep yourself secure, like I am more comfortable with that. And I can imagine that technical people, it's a much harder road to climb. One of the things that I always hear people say is, I've got my Bitcoin in cold storage, and it's like, no, 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 no. You have your private key in cold storage. There is actually nothing but a private key on that wallet sitting at whatever bank or wherever it is, right? There's no
Yeah.
Bitcoin on that. The Bitcoin exists in the database in the blockchain, right?
Right.
And so other advantages, I actually have the ability to read smart contracts because I'm a software engineer.
Hmm.
Granted, this is not a language that I am very skilled at this point, but I have the ability to kind of follow functions and look at things and have some sense of what's going on. And I intend to get better at that over time. I mean, um, I don't know. I think to some extent, like the technical stuff is more optional in crypto, but it makes it easier for me to go find information, right? Like it makes it easier for me to realize that I can go do actually on-chain analysis. So those are definitely advantages I get. It's just that stuff is very deep in the weeds that, I just would not expect 99% of all investors to
Right.
go down. So
Of course. So right now, what is some of the top projects that you're most interested in that you're following? What do you see, developing?
I will be brief about this, but my biggest investment is around Curve and Convex, and so I own both the Curve, the Convex token, and I own locked Curve tokens that are locked on Convex. And a lot of that has to do with just how bullish I am on the future of crypto. I think so. Curve Finance is basically, it started focused on stable coins, and so they're focused on building deep liquidity on stable coins. And the reason that deep liquidity is important is because if you want to do a transaction over $100,000, you need to do it in deep liquidity, because otherwise the slippage is going to be so bad that you're going to lose lots of money. And so it is on the regular. You will see 1 million, 5 million, $10 million swaps on that platform, and then that fee pays out back to the token holders. And so, and I think, as crypto grows, this is in my opinion, I think this is like a 20-year investment, because it's going to be this platform where you're going to be able to get consistent cash flow.
Hmm.
And there's also this other mechanic, and I'm going to like end it at this, because I can go like literally, this is in like a 4-hour topic all on its own if you
Oh,
really get into
absolutely.
it. But the one of the most amazing things about using something like Curve is that, or using Convex, staking the Curve token on Convex, is that you essentially also earn like 13% more of the Curve token. So if you compound that, like your position can get like really large over time, and it just increases your stake and your ability to earn more stable coins over time. And I just think it's something that just doesn't exist out in the traditional market, that only exists in crypto.
Right.
And while other projects are giving you admissions of their token, a lot of times these tokens don't have that same mechanism to like keep compounding and then continuing to earn more of the stable coins, right? So,
So what kind of, without getting too complex, like what kind of returns are you getting in that Curve investment currently?
so the stable coin return is somewhere between, we'll just say 4% and 10% APR.
Okay.
On top of that, so with Convex, you earn three assets. So you earn, like I said, the stable coins 4 to 10%. You'll earn 10 to 14% of in Curve tokens, and then you'll earn, I don't know, 15 to 25% in the CVX token. And the reason I give these broad ranges, a lot has to do with just whatever the price of these tokens are, drastically affects what the APR is.
Yeah.
Yeah, and those CVX emissions are actually reducing over time. So, but
Hmm.
I would expect um, this the dollars that you earn and the Curve tokens that you earn to actually stay somewhat consistent over time.
Okay.
And the Curve token might decline slightly over time, but as long as the value over, say, like a 5-year time horizon of the Curve token continues to increase, that APR will stay relevant, I think. So.
Well, that's good. And right now, how long are you locking these funds up for? Is it a month at a time? Is it 6 month, year?
Well, so if you go directly on Curve, you have that 1 week to 4-year lock horizon. When you do that, when you lock tokens on Convex, you're actually you're just locking them permanently, and they give you back what is essentially just a derivative, and it's called the CVX CRV token, and that is just a representation of the Curve token, and you can. So it's liquid. So you stake that token and you earn your fees. But if you want to sell it, you unstake it, and then you just go sell it. And they maintain pretty good pools that allow you to go back. And so that pool is usually within 2 to 6%. So um, you're going to pay or you're not going to pay. You're going to lose, say, 2 to 6% of that swap value relative to the curve token.
Okay.
So I know that can be a little bit of a crazy mental model to kind of imagine, but that is because they should be somewhat relatively the same. But market forces, and that peg has held up really strong for like a year.
Right.
Some people might be like, "Oh my God, I'm gonna lose 5%," but I actually think if you're trying to get out, I think it's not a bad loss, so to speak.
Hmm. So, outside of that, what other are some of your other top projects that you're
Yeah.
looking forward to over the next maybe 2 to 5 year window?
Um, I from a usability perspective, I really like the improvement of the isolated lending platforms, Silo Finance, Euler Finance, Rari, but Rari's had a bunch of exploits, so that it kind of looks a little scary. But there's no reason these other platforms can't get exploited. And I like those mostly just because it allows the isolated lending pools, and but that's also like
So, is liquidity pools one of your top plays at the moment?
so when I say I like those platforms as a from a like an optionality perspective. So like I think you know those are good places to like if you want to like like if in a market in a bull market maybe you go back to 50% 100% stable coins. I
Hmm.
like going back into those secure environments, and then maybe you borrow against you know maybe you have $100,000 in stables locked, and then you can borrow against it, right? And the APR on those things oftentimes can be really really low. And sometimes and I actually borrow against my ETH and BTC to buy more curve.
Hmm.
So this is a strategy I do now, right? Um, but there's some other like UX UI improvements, and those aren't necessarily like places to find great investments. It's just optionality, right? It's things that allow you to magnify your opportunities, right? Like I do not hold BTC on the Bitcoin chain. I hold wrapped Bitcoin on Ethereum because I want to be able to use that asset, right? I mean, there's a lot of ways you can stake that on Badger DAO and those kinds of things, and get optionality there and return. And so I like assets that work, not just assets that I just hold and they don't do anything. So
Yeah, you're looking for some sort of utility with every purchase.
yeah, yeah. Um, the you know as far as what I think is exciting for the next 12 months of crypto, I think the options markets are getting really interesting, and maybe the better is like options slash derivatives.
Hmm.
There's GMX is really interesting project that's on Arbitrum, and I forget what other GMX and Dopex are two of my most interesting plays around. So Dopex is an options platform, so you can buy and sell calls, you can buy and
Right.
sell puts. They recently released an interest rate vaults that you can do against curve, so you can literally bet against what the rate of the interest rate will be on
That's
curve.
quite
So,
speculative.
well, and what it does is if you because there's a lot of curve holders, right? It allows people to like protect their downside by
Mm,
betting against the rates, right?
okay.
And so option markets are like really important part of like having a healthy investment environment because it allows
Absolutely.
people to manage risk.
Yeah.
Um, there's a lot of other option stuff. There's a lot of stuff that's like futures, and there's a lot of managed option platforms. But I don't even want to like almost recommend some of these things because they're so new and like their results are it's. But I think these are areas to watch, right?
Yeah.
So Convex is this kind of like amazing yield aggregator, so to speak, that it's focused primarily on curve. They're actually expanding to work with Frax right now, but we're seeing on all these other chains, including on that people are building. Um, I'll just mention it. So it's called Plutus DAO. Plutus DAO is basically building. It's basically going to be convex for like DopeX and Jones DAO. And
Mhm.
what essentially it does is it's going to do the same thing that Convex is doing, where it gives you that optionality that if you want to exit your position, you can. And that's it's a huge, it's a hugely important um, thing for basically getting liquidity, because if you look at like what the lock rates were on Curve before Convex came on the scene and then what it's looked like since, you can very much see that like it is like supercharged the excitement in ecosystem, or and people, I don't know, it's there's just a lot of like great benefits to kind of having multiple projects that are kind of working together, but they're kind of solving problems differently, right?
Each kind of specializing in how they're getting to the end
Yeah.
result.
Yeah.
One thing I wanted to touch on was, you're in the process of starting a new fund, correct?
Correct. Yeah. Yeah.
So, how did you get into the fund world originally, and like what kind of like opened your eyes to that?
Yeah. I've been a fund investor since 2015. I've done kind of like a VC fund, but I've also done real estate funds and debt funds. So I was
Did you
already
just hit a
fairly
certain
familiar.
level where you were like, "Hey, I got this money to play with. How am I gonna make this money work for me? This seems like a
Yeah.
really good idea."
Yeah. And for me, like I, everybody in my family is in real estate, but I pretty much don't like real estate at all in the sense as an investor, or, like I don't like renovating houses.
Yeah,
I don't
it's
like
not
being a
fun for you.
handyman. But I can get exposure to the long-term stability and optionality of the real estate market through funds. Um, and I actually, funds are a way to somewhat diversify your money, right? Because they're going to spread assuming they're doing their best, they're doing all the things they should be doing. They're going to diversify your money across a bunch of different projects. And so, I even had early in my investment in the real estate fund, there was a default on four different units or whatever, doors, and eventually 2 years later, we actually got made whole for that kind of hit that the net asset value of the fund took. But it was it softened the blow across the
Yeah,
fund. So, and it wasn't like the asset like was completely insolvent. It was just one of those things where like this fund was meant to be like, we give you money for 9 months, then we get that money back. And what
right.
happened was they had to start renting these units out, and then they had to wait till the market got better, and then they could sell the units and that kind of stuff. So,
Well, those are the
uh,
risks you take on,
yeah,
doing something along the lines of investing into a fund, doing a VC,
yeah,
doing a Series A. I mean, they can be speculative investments to a degree.
yeah. And when I started my business in 2010, um, you know, my knowledge of all of these complex financial machinations that are out there was pretty limited. But fast forward to a year ago, I now know, 100 people that have like built businesses and then sold businesses, right? And so I just know so much more, and I think that's a lot of it. It's just the pure exposure to this space. It gave me a lot more understanding of what is a fund, how does it
Right.
work. Like I didn't need a lot of like hand holding on like why a fund has advantages and all that stuff. I kind of knew all of these things. And really what it comes down to is I started looking at managing friends and family money in
Hmm.
crypto. And I still don't actually manage any family, but I started looking at what it would take. And the best way to protect yourself and your LPs, your limited partners, right, is to do it inside a fund, right? And you can, you specify in your docs how it's going to work and how everybody's incentivized, and it's really really clear. Um, and I don't want to like, there's a lot of risks in crypto. And so it's good to have a vehicle where you, as the general partner, have control over what happens, and
Yep.
they're trusting you to manage things properly. Because, if you're just managing a friend's money, like, and you have what happened, in the last 6 months, they might want to sell at the bottom, and it's like the absolute worst thing in the world for them. But
Right.
it's the absolute wrong play, and it's um, you
Well,
know,
we kinda hit that point where, like, I mean, I don't know if we've fully experienced it, but a lot of people are really close to max pain in the crypto
yep,
markets. It's a lot of people have been brought down to their knees, and I think, most recently, the Luna collapse, like, saw a lot of pain in the market, and
yeah,
those are things that I've read a few articles on this as well, is, like, not only do you look for price down, right, which we're over 50% down in Bitcoin, most alternate altcoins are down way more than 50%.
mm,
Um, so I look for that, right? I look for price being down significantly. Um, you look for general, it's like slowing of adoption almost too, where I remember 6 months ago, every other day there's a new article about, Coca-Cola is going to use this or PayPal is now using this. And every single day, Chipotle is going to accept, payment in Bitcoin. And like now it's like, okay, maybe you hear one a week. And then last thing I look for is actual detriment, like a big event, which for me was the Luna collapse, where you
mm,
see like max pain experienced, gives people total doubt in the crypto community. Why are we even here? I was nuts thinking that I could get 20% for my money for doing nothing. And, I think that's where my signs point to, like, I think we've experienced max pain or we're at least very close.
yeah,
Do you have any thoughts on that?
yeah. I do. It might be more of a tangent to what you were thinking, but you made me think about. So I'm a huge fan of Nicholas Nassim Taleb, author of The Black Swan, Anti-Fragile, a bunch of different stuff. He's like a very experienced options trader, and so he really sees the world through optionality and like tail hedge events, right? Fat tails, right? These things like COVID and 9/11 and the 2008.
Um,
We don't really know that they're going to happen, or maybe there's like a handful of people that know that some of that stuff's going to happen. But
yeah.
um, and oh, I kind of lost my train of thought where I was going with this. Oh, the I I've never actually used the Terra Luna blockchain at all. I've never held any of those assets, but I liked what they were doing, and I was like, okay, this looks interesting. Um, what I'm less shocked that we had a stable coin collapse, but I am definitely shocked that it took the Terra network down. Like it literally imploded that blockchain.
$60
And
billion dollars gone.
and it's very clear that like and so okay, so the reason I brought up Taleb was he talks a lot about like when you keep organizations small and you isolate them, it like reduces the systematic risk, right? And it's very clear, had they not built a stable coin um, that was directly attached to their platform, like they could have maybe survived, like the blockchain could have survived even if like the stable coin didn't.
Right.
um but because the backing,
Well,
it's just like
because it was algorithmic, it opened the door for
what.
what to happen.
And it was just like the primary way to back the asset was the platform token, and it like they
Mhm.
if they would have backed the asset with Bitcoin and Ethereum and other stable coins, it probably wouldn't have been that big of a deal. um, So that's something that I will continue to like look for, and it's one of the reasons why I like these like decoupled projects. Right? It's like like um, if this was like a giant corporation, if this was Facebook building curve and convex and stuff, it would all be the same project, and they would all be the same tokens, and they would all be like massively intertwined, and you know, and so this kind of separation and this native composability to blockchains, is really really cool. But I
Mhm.
think it's something that I'm going to be looking more and more at. I mean, one of the reasons why and this happened, my focus on Ethereum and Ethereum blockchains really goes back to last fall, and it was, I've done transactions on Phantom, Binance Smart Chain, Polygon, ZK Sync, Arbitrum, a bunch of different stuff. But one of the problems is all these alternative layer ones. A lot of them, at least 6 months ago, had no direct bridge. Like you couldn't go from Coinbase to Phantom, right? Or
Mhm.
like one of the advantages of FTX is that you can go directly to Solana, right? And I
Yep.
think that is a really important thing to keep in mind whenever you're going to go use these networks. Can you directly bridge? Because if you can go directly, then that means that that centralized exchange is more likely to honor your ability to exit, right? And I think Vitalik has been beating the drum for many years that bridges are a very dangerous thing, and I think, I use them, but we have to respect the idea that, like, they introduce a lot of systematic risk. Now, what happens on the Ethereum blockchain with Arbitrum and Optimism, and ZK Sync is you will always be able to do like an L1 like a native Ethereum transaction to resettle your assets back onto Ethereum. And you can't do that. Like if you're trying to bring assets from Phantom back to Ethereum, you can't do that, right?
Right. Yeah.
If the bridges are all broken and whatever, right? So, like we know that, like, I mean, I know that there's been, I think it's almost $2 billion in assets stolen from bridges in the last year or something like that. I mean, it's pretty insane. So,
Well, there
um,
was just breakdown. I think if it wasn't yesterday, it was a couple days ago, and we're talking on uh, the 6th here, uh, where Bored Ape and their NFT collection, I want to say it was like 50 ETH were stolen. It might have been more, right
I
off
saw
the platform.
128 or something like that.
Okay. Yeah.
Yeah,
So, I mean, we're talking a good lump sum of money to just
yeah,
disappear. And I think though, especially as an investor myself, on a project that I, gave a good look up and down and considered, I mean, that definitely concerns me to think that people are just snagging this stuff up. And we just had one of the former directors of OpenSea just got investigated, and I think he got subpoenaed. So there's definitely,
yeah.
some
He was using insider knowledge to pre-purchase NFTs, and I mean, I like, I remember on Twitter when it happened, right? Whenever people started exposing him, like
yeah.
he was making like lots of money, like tens of thousands of dollars or more, weekly or something like that. So
And this is where, like, some regulation could, you know, potentially bring forth, and we talked about this on one of my last episodes, like just a more mainstream adoption of crypto. Uh,
mhm.
I know a lot of people got into crypto because they don't like regulation and they want to be decentralized, which I totally get and I'm for. But I think there is, in economics, you learn that there's really no such thing as a free market, right? Like a true free market needs regulation, or else you're going to have monopolies, i.e., Amazon. Um, and so in crypto, we kind of going to have some sort of regulation to allow a free market to sustain itself in the crypto industry. At least that's what I think. It's just making sure and mitigating that the right people get into those positions, the right organizations, so that we don't kind of end up where we are now with mass inflation, not as much economic goods as we need. I mean, America can't even get enough baby formula for its kids and families. Those are things I think that happen when you have the wrong people pulling the strings.
Yeah, yeah. I mean, there's trillions of dollars sitting on the sidelines because we have no They have no coverage, to start, you know, investing in Bitcoin and moving on chain and those types of things. And it's, it'll be interesting because, um, how likely is JP Morgan going to want to put $1 billion into Curve? I don't know. Like,
Who knows? Yeah. I mean, I
you
guess
know,
with
I,
the with
yeah, I
the
was just
right
saying, I'm
regulation.
making a lot of assumptions that like eventually we're going to have all this money flow into these chains and they're going to start using these existing projects and it will, rise
Yeah, the
all boats.
early adopters will just make money off purely off that. But
Yeah,
as you kind of hinted at, there's always the chance that that doesn't happen.
totally. Yeah. And I think we need regulation. I just think that, I'm very concerned that it's going to take forever and they're not going to do it right. And there's going to be all these problems. And, I literally stood up at DeFi Conf in New York in December, and there was a panel of like all these guys that worked for representatives up there, and I said, and they were pretty knowledgeable, so I felt good at least for that small 5 or 6 guys that are people that were on stage, um, but I was like, listen, like you guys can only exclude us from taking advantage of these opportunities. Like that's all you're doing. Like we can take advantage of them now, whether it's legal or not is a whole nother thing. But like if
Hmm.
you guys get this stuff wrong, get the regulations wrong, you're just going to exclude American citizens from legally participating in this stuff. So um,
Yeah, it's true. I mean, I think the rate of adoption is actually starting to become a little bit faster in foreign markets, and I think there's more of a demand for it. And a lot of it probably stems from the fact that their currencies aren't the US dollar, right? So there's more opportunity there.
mm,
But a lot of them, the adoption speed's becoming faster, where they're saying, like, let's do it. I mean, El Salvador was ready to just start offering Bitcoin backed bonds, I believe. They just, just decided not to after last weekend. But just the thought out there of doing that, I think that is
yeah,
what, we need
yeah,
in the industry.
yeah. I would advocate that they, and I'm sure nobody's ever going to hear this, but like, I mean, like nobody at a level that it would matter, but like, I think that they need to come up with a new classification, um, because trying to call everything in crypto security or commodity or whatever, right? I just think it's the wrong mental model for it. I
Mm,
think that, there's all this like weird stuff that we can do with this programmable money that doesn't really exist in the traditional market, at least it's, maybe deep in the bowels of finance that I don't know.
yeah,
Um, but there's, so when you lock up a token for 4 years, what does that look more like? It pays you like a coupon, but it's a variable rate coupon. What does
yeah,
that look like? And a coupon is, I'm kind of like I'm kind of like seeding my idea, but it looks like more like a bond, right? It looks more like a debt instrument. I go out into the public market, I buy $1,000 of some token, and then I lock it for a year, and you're going to pay me a coupon, and at the end of that 4 years, I get my tokens back, and then I can sell them. What does that look like? That looks like a bond, and
it
and
does.
um, so like, wait a minute, it's a security until I then lock it, or well, I don't know. It's like, I don't know. A security in general is this idea that like you're going to make money from it, and it's, investing in an enterprise, right? So I get that from the
Yeah,
definition
I mean,
perspective,
I I get what
it's
you're
a
hinting at, which is I think is
security.
that it has the potential to take on a lot of different forms depending on how it's used,
Exactly.
right? In one sense, it's a commodity, in another sense, it's a security, in another sense, it's a bond, all at the
Well,
same time.
and that's my point, is that like at one point like this asset is a commodity, at one point it's a security, at one point
Right.
it's, or an equity like instrument, I should say, not a security, because the equity is the more, and then other times like it's a bond, and I'm like, you're not like, I don't think that they're going to have this, I'm worried that they're not going to have this level of sophistication in the discussion and in the regulations. So
Right. Yeah, it's a great point. So I wanted to kind of hit on something else that we talk about here on the Rocketcast. So, part of this is getting people to realize the importance of having good balance in their life between wealth and their health, which includes things like, a daily routine, exercising. So take me through, like, you know, uh, Scott Nixon trying to get his fund off the ground, and what's a typical day look like for yourself? Like, how are you prioritizing your time, your health, so that you can, be optimized and function at your
Yeah.
highest capacity?
Yeah. I mean, I like to mountain bike, so that's really important to me. And I walk my dogs every night. And but I am somebody who is ADHD, and so whenever I get into stuff, I like kind of rabbit hole. Like I have a really hard time blocking because like, and especially the nature of a lot of my work, it's hard for me to like if I'm in the middle of a problem, the last thing I want to do is switch tasks, right?
Yeah,
And I don't know, there's just something to my nature that makes that really challenging. But I'm thankful for having a wife that like, makes me, eat dinner at 5 o'clock every night, and then I walk the dogs, and then maybe I come back and I work a little bit. But like I, I'm 43 years old. I have experienced the downsides of like sitting too much and neglecting my overall health. Like I did this whole thing where like I've standing and sitting and trying sitting on different things
right.
um and I have like just massively tight hamstrings, and so it's and I have like shoulder issues because I'm a side sleeper and all these like weird things, right? But it's like so important that I like at least take some time. And the way I do that is I like literally have my like little dumbbells sitting right next to me so that like if I stand up and I see them, I just like do like a set of like rows or curls
I
or
love
something.
that.
I'm like really bad about like setting aside an hour. And part of that is I need to like, I actually think I'm going to build a home gym and I want to start squatting and stuff. And it's just, I don't know, there's a lot of things going on. And I'm always like, I'm bad about shuffling my priorities, but I love yoga mostly because I'm tight and it like really helps me uh, balance things out. Yin yoga for me is like the best way to like fix all my tightness. I have
Right.
my QLs are really tight, and and it's funny. There's some YouTubers, Bob and Brad, that do some really great, like it's almost like occupational therapy stuff where they're telling you how to like sleep with pillows and like how to like stretch certain things out in a healthy way. And I like that it's coming from two guys that are like credentialed versus some guy teach me how to lift weights, right? But
Hmm.
no problem with that. But I'm a I try to eat a lot of kale. I'm a vegan vegetarian mostly. Um, I'm definitely a dedicated vegetarian. I just am a little, little occasionally get off the vegan thing.
Right.
But for me, diet is really important. And I'm actually wearing a continuous glucose monitor. That has been really helpful in the sense that like
Are
I'm
you a
always
diabetic or just to keep
no,
track of your blood sugars?
no. It, I am a carbaholic, and so I love like I literally would be like tofu and rice, and like that would be my lunch, right? But like if you look at what it does to my blood sugar, it just blows it way up because
Yeah.
there's so much carbohydrates. Um, and I so wearing the continuous glucose monitor is a good way for me to like go, oh, um, you know, um, it needs to be more balanced. And so I'm actually eating a lot of like keto, like so keto breads, keto cookies, keto cereal, because I can still have some of what I want, but like it doesn't affect my blood sugar and it's more balanced, right? There's way less carbohydrates. There's like monk fruit in there, and it's
Right.
so
Yeah.
it's
I
just a
do.
better choice. And I had no idea that it was my blood sugar was doing this crazy stuff. And it's um, there's this um, high blood sugar is not something that's easy to understand, right? But it's also helped me identify when my when I've dipped too low. right? And like it doesn't it happens when I exercise, but um, that has been really interesting, and I'm still trying to adapt and work through how that stuff works. But believe it or not, just wearing the glucose monitor, and I have changed my diet a little bit, but I'm not a lot. It's I've already actually lost a few pounds, and I mean this is one of the reasons why these things are so popular now. Is a lot of people are using them to diet, just because like when your glucose is really high, you're way more likely to pack on weight. And
Well, and I mean, so my background, I mean, it's all about for mostly what I do. It's about timing your glucose spikes around times that you're going to be active, right?
yep,
And the problem with most of America, or at least people that are going to be listening to this, is a lot of us wake up and want to spike our glucose, right? You want to
yep,
have a slice of toast, and you're having orange juice in a lot of places, pancakes or French toast or whatever it is. That's what's a lot of times offered, even oatmeal. And
yeah,
there's syrup thrown on it, and you're spiking your glucose. And what are you doing? In your case, you're going and sitting right at the computer, and you're getting right to work.
yep,
Where is the need for all that carbohydrates? Where is the need
yeah,
for your blood sugar to be so high? Versus, if usually maybe after this call is your downtime where you do get a few sets of rows in, you take the dog for
yeah,
a brisk walk, then it's okay to spike the glucose because it's being
yeah,
used. And I think that's a huge issue too that people don't really coincide is carbs aren't necessarily the enemy. It's being active around the times that you're ingesting these
yeah,
foods so that they're actually being used,
yeah.
which I think is maybe a good thing that can come from someone at least being more conscious of their blood sugars.
Yeah, yeah, and everybody affects. I mean, this is the puzzle that I think is not obvious for a lot of people. Is that we actually don't know how our body reacts to everything, and that's why, like, for some
Truth.
people, they can eat a ton of stuff and it won't do anything to them, and others it will. Like I can eat, hot sauce mixed in certain ways, but if I just put it on like I don't know, like chips and salsa, like it just destroys me, man. So I mean,
Right.
we have to just lean into the fact that everybody has to figure some of this stuff out for themselves. So yeah,
Yeah, absolutely. I mean, I think kind of to segue and maybe bring things all full circle here. Just
yeah,
like investing, like there's a different flavor of investing for everyone, and a lot of it's trial and error. Like, do I
yeah,
have the time to be a chart monkey today and watch the charts for 6 hours and do some enter a trade here, exit a trade here, enter a trade here, exit a trade here, oop
yeah,
alert, or am I gonna park my money with Scott and he's gonna take care of it for me, and I just need to hop on a call once a month and just check in on what projects we're doing? Or maybe I'm a swing trader. There's different ways of that, and it's the same
yeah,
thing with your diet and exercise. Try some different ones, see how they make you feel. Like, do and give it a month, give it 2 months. Like, do
yeah,
you feel like you have more energy? Are you sleeping better? Are you building muscle? I don't think people do that enough, and they expect to just, like you said, go find some YouTube guru that's gonna answer all their problems that are very specific to their body and
yeah,
their genetics. And that's simply not the case. I mean, I've gotten to where I have physically by being my own test subject. Try
yeah,
something out for
yeah,
6 months. Does it work? How do I feel? All right, great. Keep this, get rid of that. And I think that's ultimately how people are going to get the best results over time.
yeah. And it's funny because like there's some counterintuitive stuff out there. Um, there's a lot of people have been doing a lot of intermittent fasting in the last 10, 15 years, right? But
Yep,
there's some evidence that there are some people that when they intermittent fast, they just gain weight, right? So like you got to be open to the idea that it's not going to work for you the way it does for everybody else. So
absolutely.
yeah,
All right, Scott. Well, it's been an
yeah,
absolute pleasure having you on the Rocketcast. I think we have some great takeaways for listeners to
yeah.
listen about and do some research on. Um, before we wrap up, is there anything else that you wanted to hit on?
No, I would say that from an investing standpoint, I believe very much in high conviction investments, but I also think you need to balance that with strong mental models and looking at your own biases. Like are you making this investment because you're like super excited? And this is why I like the idea that you start out really small with any investment, that you go in $1,000, $5,000, whatever you consider small, and
Mhm.
you start with that small thing and then you learn over time and you maybe add to it. I just think it's um like I think you really need to have deep understanding of investments before you make it. Otherwise, it's, I don't know. If you really want good results, just I think
Well, I
it's
think that's a beautiful point is like being able to separate yourself from your emotions, and sometimes that comes in the form of just reducing your overall position size, so that way you don't feel so connected to the
yeah,
idea, the project, and you can have maybe more of an objective view of it.
yeah, spaced repetition. It's like working out, right? It's like space this stuff out, and it like you get a little better sense of how it really affects you. Yeah. So, yeah, it's you can find me on Twitter at Crypto Cash Flow, or Skyliner Capital is the name of my fund.
Okay.
But yeah, that's looking forward to getting that launched here in the fall. And it was great meeting with you and talking to you today.
Yeah, we'd love to have you back once the fund is up and running, and maybe we can talk a little bit more about. We'll keep it off the proprietary stuff, but we can talk a little bit more
Yeah,
about how it's gone, how how you've really developed what you're doing, and kind of the
yeah,
steps you've taken since. I think that'd be great to follow up on.
yeah. Awesome. Great chatting with you today.
That's gonna do it, Rocketcasters. Be sure to share this one out with your friends, family members, who all want to be healthier, wealthier. Myself and Scott, I think, provided a lot of good stuff for you to think about, chew on. Remember, this is not financial advice, it is purely educational. Keep that in mind when you are making decisions. You can share this out via Spotify, Apple Podcast, or YouTube. You can check out my TikTok at RudamanCap or my Instagram at Ruda. That's RUUDDDAAA _ something like that. You'll find me there. All right. Peace out.